Are you making decisions on gut feelings or real data? Let me tell you about Steve. Steve came to us because he has a pest control franchise, and we were already servicing 7 other franchisees at FRAXN. One thing we did with this franchise system was get everyone on the same page. So yes, they should be using the same names in their CRMs. In fact, they came to us and they're on 2 different CRMs between the 8 of them. And most of the names do line up, but not all of them. So we got everyone together on the same chart of accounts. And so all the revenue is mapped consistently. Pest control one time, recurring, initial, residential, commercial, mosquito one time, mosquito recurring. And so we got everyone speaking the same language, at least when it comes to their financials, and then they can measure apples to apples. Another thing we did with Steve was get on the same page with his CPA, his tax accountant from the get-go. So when you get on FRAXN, you can continue working with your CPA. You don't have to break up that relationship. If you don't have an accountant, we can do taxes also. So one thing, being a mosquito season, was Steve was able to collect over $250,000 of revenue for 2025, but he did it in 2024. So working together with a CPA, we are now recognizing revenue in 2025 during his mosquito season. That would be a little bit difficult to do with a typical local bookkeeper, but we understand mosquito season. It's just a matter of when does it start and when does it end. Steve loves the dashboard that we provide. So it's a lot more than just the reports you get out of QuickBooks. It's very interactive. In fact, with Steve, his background is not pest control. So when it came to the things that he should focus on outside of financial statements, he loves these key performance indicators. And because he has a mosquito business, now this is not Steve's data, he loves the variability that we can do and provide as targets for revenue, for example. So, mosquito season is not consistent year round. And so with this dedicated account manager, he's able to set a target or goal by month. So you can see that with the dotted line. And then the solid line are the actuals. Because his background's not pest control, he's curious about gross profit margin. What should it be? In pest control, we want to see between 55 and 65%. Of course, the more the merrier. What does that mean? Think about your cost of service, technician labor, chemical supplies, materials, fuel, vehicle maintenance, auto insurance, all in between 35 cents on the dollar and 45 cents on the dollar. So now Steve knows, hey, let's set a target of 65%, as you can see this in this example. And then the real is going to track against that. EBITDA, earnings before interest, taxes, depreciation, amortization. Companies are bought and sold for multiples of EBITDA every single day. At least after the transaction is done, you can reverse engineer and say, what was the EBITDA multiple? So that's not Steve's background. And so this is an important KPI that we need to put in front of him to make sure that he's tracking in the right direction. But the 2 biggest KPIs that impact Steve and what he continues to tell us about is how important it is to him to track and measure revenue per technician and revenue per employee. So he could set that target from the get-go and make sure that his on season, his busy season, and his off season, that he has the right number of techs, that he is staffed up for the busy season so he can make hay while the sun's shining. And then revenue per employee. So important thing with revenue per employee, make sure that you have the right number of salespeople, your managers, your customer service reps. But again, not too many. So you want to make sure that you have the right number of direct employees or indirect employees or technicians and non-technicians. And you can see here the other rest of the 13 KPIs that we have at FRAXN for all of our clients. Another thing that Steve loves to see, now we provide this in his monthly report, but he can also see it in his dashboard, is his break-even analysis. So you can see that break-even, the exact point that this is how much money that you need to invoice or produce each month. What I like to do is I want to see that average over the year. So if I can see your break-even January through July, divide that number by 7, it's roughly $80,000. So we need to go produce at least $80,000 every month, all things being equal, just to break even. Of course, you can see that there's profit here as he's sitting above the break-even point. But the cool thing here is as your revenue increases, so if you think, well, what if we produce a little bit more revenue or a little bit more revenue? Well, it's going to have more direct costs associated with that or variable costs because you're going to have to pay more technician labor, You're gonna have to buy more chemicals. You're gonna have more fuel and vehicle maintenance as you're out on the road. And so you can quickly see that and make decisions about your business. And lastly, with Steve, he loves this benchmarking data. And so he can see gross profit margin across the country with other pest control companies. How is he comparing it with other companies in his region? So you can see that we have all these pest control companies and we segment them out by geographic area. Or you can see it also by revenue ranges. So how are you doing with other companies in our industry across different revenue groupings? And that's for any of the 13 KPIs. So he could spend as much time as he wants in here just seeing how he's doing against other companies in the same industry. What that does for them as a franchise system is that they're able to see their numbers apples to apples and that they can compare their KPIs, help cheer each other on, and make sure that they're performing their best and encouraging each other along the way. One more thing that Steve loves, in addition to the benchmarking data, is this forecasting tool, or it's a budget tool. Now, the budget tool is able to break down the different types of pest control and mosquito or termite revenue, your different cost of services. Steve's a planner, and this lets him plan up to 5 years in the future and make adjustments as he goes. It allows us to provide him actual versus budget reports, and so he can see how he's doing along the way. You can update this at any time, and you can also see how it impacts your balance sheet and your cash flow. You can make projections. Hey, I plan on hiring a salesperson in this month or 2 salespeople in this month. What's that going to affect in terms of the drivers it's going to have for revenue and your direct cost? Maybe your indirect cost. That's going to be advertising. And so you can see how that's going to impact you for the next 5 years. We're grateful to have Steve as a client and grateful to see the successes that he's already having with FRAXN. Make sure that you like and subscribe so that you're the first to know about the 2025 benchmarking study. See you soon.